Welcome from central Poland. I'm in Łódź now. How are you doing? To be good at investing, you need to learn to look for opportunities where others see problems. Every time you invest in something, the money is not working on a potential other investment. Have that in mind while investing. That is why it is essential to look at different asset classes as well as foreign markets. Remember that there is always a bull market somewhere. We just need to look for it. The market always gives us some bargains. Let's look at the global outlook. To compare how expensive are different markets, we can use the price to earnings ratio. It helps investors to analyze how much they should pay for a stock based on its current earnings. Investors use this ratio to decide what multiple of earnings a share is worth. In other words, how many times earnings they are willing to pay. So from this chart we can see that United States is 20.6, which is more expensive than United Kingdom market, 16, German market 17.3. Then we can see that Poland is quite cheap, it's 12.3, so almost twice cheaper than American market. Russian market is 5.5. This chart, which shows ratio of American dollar to Polish zloty. We can see that the value of a dollar almost doubled in relation to the Polish currency during the last 10 years. From 2 zlotys per dollar to almost 4 zlotys per dollar. I will discuss how it affects Polish companies later in this video. The last 10 years were very good for American currency. Currently the dollar is very expensive in relation to emerging markets currencies. What does it mean? Well, American investors can buy more assets for their dollars. So finding cheap markets can generate a really good profit for them. This is the chart of the relative strength of MSCI emerging markets versus S&P 500. Those are the moments where American markets are expensive in relation to emerging markets. Those are the moments where emerging markets are expensive in relation to American markets. And so the question is the latest softening of the trade war the trigger for the migration of the capital to emerging markets? Will something like that happen? I do not know, but there are higher chances for this migration. Taking into account this cyclicality, we see that the capital is migrating between developed markets like American stock market and emerging markets. And then let's look at this chart showing real GDP growth. From this we can see that American market was growing 2.3%, United Kingdom was growing 1.2%, Germany 0.8%, and Poland was growing 3.8%. So if we compare with other European countries, Poland is growing really quickly. Why I added some more exposure to my Polish stock market portfolio. First is the valuation. The Polish stock market is not expensive. The companies are not overvalued. Then there is growth. Poland is growing really fast currently. Then there is negative sentiment towards emerging markets, and Poland is still considered emerging market. There is also negative sentiment because of banks and commodities, which are big components of the Polish stock market index. And commodities are depressed. Commodity companies in Poland are depressed because of low prices of copper, zinc and coal. So those are the aspects which makes the Polish stock market not expensive. What gives me the margin of safety in investing in the Polish stock market now? So first thing is the employee capital plans coming into Poland, which is the similar solution as defined contribution pension plans in the UK or in the US. And then we can choose the best sectors. So because of expensive foreign currencies, gaming is the best sector to invest in, because those are exporters. The most profit for game developers, companies, come from abroad. Expensive currencies means that the profit in Polish currency are much better. And there is clothing, because if the US dollar will decrease in value in relation to Polish currency, clothing companies should improve their margins, because those are importers. And clothing is also gaining from the inside demand for better quality clothes. Another aspect is that we shouldn't invest where everyone is investing. So public in Poland is not interested in stocks. Typical John Kowalski is not investing in stocks. Everyone is now rushing to buy properties. What it means is that at some point there will be transfer in those money into other asset classes. And all those aspects make current timing in investing in Polish stock market quite good, in my opinion. Thanks.